These are all the things that you should be mindful of because some people fail in trading not because they are wrong, but because they don't know how to place their entries.
Most traders lose money not because they lack strategy, but because they lack structure. They chase trades instead of building systems. They react to charts instead of reading them. They forget that even in the market, God's design is order, not chaos. So in this masterclass, I'm going to show you how to trade US30 the institutional way, with structure, order, and obedience to your own system, so that you can stop gambling and start managing your trades like a professional fund manager. My name is Mafigi, but you can call me Ikandale Undlu. I'm a trader who helps traders think like fund managers and retire wealthy. I'm also a qualified assessor and accredited skills developer, which means I don't just teach you how to trade. I help you design measurable trading excellence programs, get certified, and trade legally and profitably under a compliant business structure. As a registered skills development facilitator, my goal is simple: to help traders become compliant, profitable, and skill-certified professionals who build a sustainable trading business that serves purpose. That's why I'm a systems and structures girly. While everyone else sells you robots and indicators, I sell you the blueprint behind the sustained success. On today's video, you'll learn what US30 really is and how it moves, how to identify institutional key levels across multiple time frames, how to apply this analysis intraday with precision, why structure, journaling, and planning are the foundation of profitable trading, and how these same principles position you as a tax-compliant business owner, not just a retail trader. The US30, or Dow Jones Industrial Average, represents 30 of the largest traded companies in America. It's price-weighted, meaning stocks like Apple and Microsoft have more influence on movements than smaller ones. So when those heavyweights moves, US30 reacts. That's why microeconomic reports like CPI, inflation rate decisions, and unemployment data often cause explosive volatility. To trade it successfully like a professional, you must know what moves it as much as you know what your chart looks like. Key levels separate professionals from amateurs. The areas that institutions use to position size, manage liquidity, and set traps for emotional traders who don't have a blueprint. On a monthly time frame, this is where you get a macro view. These are institutional footprints. They define a large-scale market structure. Price often returns here. They're like magnetic zones. Align your intraday trades with these micro levels for maximum accuracy. God said, "Let there be light." And light represents clarity and understanding. It's very hard making money trading what you don't understand. If you don't understand it, it means there is no light. And as you are made in an image of God, there it's your turn to say to your chart, "Let there be light." Never trade in a dark, formless market. Always bring light, research, context, and accuracy.
Since the market movers has already given us footprints, the worst thing that you can do to yourself as a trader is to ignore the roadmap that you have been given and try invent your own things. Many traders remain unprofitable for years because they choose to ignore what is in front of them and choose to invent their own things that only exist in their own head. As a smart trader who makes consistent profits trading the financial markets, you simply draw your key levels exactly where the market makers left footprints for you to work on. You don't invent your own footprints. Why do you do so? Because it has been proven over time that the market makers always comes back to retest those key levels. Currently, the market has just retested this last key level, meaning that if you had placed your trade right here, you would be sitting on a very good profit right now.
Weekly time frame is your intermediate bias time frame. Here, you simply just refine your directional bias. Identify your swing highs and low and let them confirm whether price is respecting structure. Here that once more. Identify your swing highs and lows and let the market itself confirm whether price is respecting structure. You don't confirm it. The market does confirm it for you. Why you don't confirm it? Because you don't know what the market is going to do next and you don't have any powers in you to control it. If you try to invent your own, you will lose lots and lots of money trading the financial markets. So do your own work and let the market do the rest. This is where obedience meets wisdom. Trade with the structure, not against it.
I saw on the monthly time frame that we had a resistance building up here, which is why I marked this zone with this line. That is why it is very important to do yourself justice when you are reading your monthly candlesticks, because you will keep on working with them throughout all your time frames. If you got it right on your monthly time frame, then your analysis will be mostly precise all the way through to your entry time frame. You simply use your weekly time frame to confirm your monthly findings, fix where there's a need to fix if there is a need to fix, and adjust if there's a need to do so. As for this analysis, there was no need to fix or adjust anything because you can see that everything, every key level is seated exactly as it's supposed to sit, as I drew on a monthly time frame. So there was no need to fix or adjust anything here. What is currently happening is that the market currently has retested the previous key level. Now that the market has retested the previous key level, the only thing that we are looking for is for the market to break this level and close above it to confirm the continuation of the prevailing uptrend.
Then you move to your daily time frame and you use your daily rejections and liquidity sweeps to align your entries with their higher time frames narratives.
We currently do have one rejection here, but it's not as the key level. It is very important to know which rejections you take and which rejections you ignore. Why you are taking the rejections you are taking and why you are ignoring the rejections you are ignoring. How can you make money, consistent money in the financial market, trading what you don't understand? Because you will always be caught up in trends and analysis that you don't fully understand. If you don't understand it, obviously you will lack confidence in yourself, even in what you are doing, because you simply don't know what you are doing, to be precise. We are ignoring this rejection because it's in the middle of nowhere. And we are ignoring it because we don't take or look for trading opportunities in the middle of nowhere. So we want to see rejection candlesticks coming up at this level right now, as did on this previous level and this previous level.
Professional traders anticipate, but retail traders chase. Key levels are not just about entries and exits, but they represent order flow concentration, where value is defined. The more you honor structure, the less you rely on guesswork. And that's exactly how the kingdom operates. Order, not confusion. When you trade with godly principles, you attract godly results. Trading systems, channeling, logbooks. These are more than just trading tools, but they are your pillars of excellence. They don't end by just making you profitable. They also make you accountable. Once your key levels are marked, Move to your execution timeframes. I personally use 1 hour or 15 minutes, nothing less than this, because I learned the hard way. 5 minutes has lot of false signals. Unless you are just a natural scalper and you trade small time frames anyway. But if you are a day trader or a swinger like me, 1 hour time frame to 15 minutes time frame is where the real grill is. Here you will be looking for liquidity sweeps, the areas where the market clears stop losses.
Here is another example for you if you don't know what liquidity sweep look like. You see here we are at the resistance level, and at the resistance level you know that we are always looking forward selling opportunity. Don't forget the second rule in trading, which is we buy as the support and we sell as the resistance. So as the market approaches the resistance, you should be aware of the potential selling opportunities that may take place. Now here is the thing. For a break of structure to be considered as valid, the candlestick breaking the resistance, this resistance must break and close above the current resistance level. As you can see here, the price tried to break out, but the candles closed below the level. Another one, and another one, and another one, and another one. But here we have this candle that actually broke aggressively with a very bullish candlestick, pulling us into believing that the market has finally broken above this resistance, only to find out that it was just a liquidity grab, not a valid breakout. Because see, if you entered sell because you are following the rule of we sell as a resistance, and you wouldn't have been totally wrong, because according to your own eyes, you have multiple confirmations. You have multiple rejections on the left, and now you are at the resistance again, the same resistance, and you're seeing this inside bar coming in, you're seeing this rejection coming in, so you jump for a sell. When you jump for a sell at this level, obviously you will place your stop loss above, a little bit above the previous high, and target the next support. But then, before your trade goes to your direction, it starts by going up above and sweeping your stop loss first, taking you out of the trade before it makes your exact move here. These are all the things that you should be mindful of, because some people fail in trading not because they are wrong, but because they don't know how to place their entries. And if you are a clumsy trader who doesn't have a plan but only trades their emotions, after that situation, the market must get you again. Because if you see this morning star appearing right here, you will say, okay, I was wrong about this trade, I was wrong about this direction, but now I see a morning star, surely the market is going up. I was wrong about the direction. The market is going up, so I'm taking this trade. You take the trade, the market will be sitting on a good profit for a little while, but the market will come back again and move you again and take out your money again and take you out of the trade, because you are not a trader, you are a gambler. You don't have a plan, you are trading your emotions. Therefore, you will consistently lose money trying to make money trading forex.
Secondly, you will look for structure shifts. These are signs of institutional order flow changing direction.
In order to identify the structure shifts, you must first know the structure. You know that in an uptrend, the markets would move in an upside direction, creating higher highs and higher lows. And in a downtrend, the markets would be moving on a downside direction, creating lower highs and lower lows. Looking on your left, because it was an uptrend, we didn't want to see a lower than the previous low, because we want to see a series of higher lows moving the market to the prevailing trend. When we start seeing equal lows like this and equal highs like this, that is where you must start being more aware that there must be a potential shift that may take place in this current market. So those were your signals. People who know and understand structure get away with a lot on the markets because they already see such moves before they even happen.
Thirdly, you will look for rejections. These are your confirmations that the level is respected.
Currently, we can see that the market is indeed respecting or rejecting this level, which makes sense because we still have a gap that is remaining to be filled behind. So it is expected that the market should produce rejections at this level. So if you took a sell here, you would be considered as a wise trader because you are at the resistance level and you see that there's a gap behind that is still remaining to be filled, which is validating your claims even more. The trend may be uptrend, but also consider or remember that if you are taking a sell at this level, it will be a short-term sell because this is an uptrend.
Every trade must align with the higher time frame story, and every decision must be documented in your trading journal, plan, or checklist. Because if you are not trading your plan, you are definitely trading your emotions. And emotional traders pay tuition to structured ones. And when tax season comes, because it's coming, only traders with records, logbooks, journals, and plans can claim their trading related expenses and present proof to SARS or RIS. Now that's how structure becomes both profitable and compliant. Here's how this applies to your business structure. If you are a sole proprietor, your trading plan and journal serve as a proof of income and business expense. You can claim legitimate costs like data, mentorships, and software, but only if they are recorded. And for my PTY LTD traders, structure elevates you from individual to institution. Journals become financial records, not just notes. You can pay yourself a salary, reinvest profits, and become tax efficient. That's the power of trading as a system, not as a hobby. Trading isn't gambling, it's a skill. And just like any skill, it can be taught, developed, and certified. When done God's way, with structure, order, and obedience, it becomes more than just income, but a real heavy tool for kingdom expansion. Every chart, every journal, every plan is you building wealth with divine intention. If you want, you can use my public email to receive my personal trading checklist, which is my own system I use daily to increase accuracy, discipline, and peace of mind in every trade. You'll understand why excellence always pays. You've just learned the institutional approach to US30. But most importantly, you learn the divine principle of structured stewardship. Because God blesses systems, not chaos. And those who build structure in their trading build longevity in their wealth. May the peace of God rule in your heart. I'll see you on the next video.